It's Trader Moha here. I'm here to give a trade recap on US30. So actually I took this trade on Thursday, 5th March 2026. So let me get straight to the point. So what actually happened was simple and straightforward. I actually took two trades, one trade in London session and one trade in New York session. So let me explain how I took both trades. So what actually happened is, as you all know, I mark out my Asian range. My Asian range, that is the red kill zone, which the indicator kill zone at Joshua helps me segregate each and every session. So this is, I mark out my Asian high, my Asian low, and then the Asian close. So price actually swept, you could see price swept the Asian low during 9 o'clock a.m. Nigerian time. That is inside the London kill zone. So I actually set an alarm here and price rang. So actually when price rang, I switched to my 1 hour chart and I saw that I waited for price. As soon as price swept the Asian low, as you all know, I'll wait for a candle closure, a 1 hour candle closure. That is the bearish candle. Sorry, a 1 hour candle closure. Let me come again. This bullish candle that closed above the Asian low, as you can all see. So as I waited for this bullish candle to close, if I have a level, I'll wait for the candle to close, then it's weak here to get swept, then we buy. So as I saw that, I also checked, sorry, let me go back to erase those red lines. So I also checked the 4 hour chart. I saw that 4 hour chart, on the 4 hour chart, there's also, let me push this back. There's also, it is that 1 hour candle that I showed on the 1 hour chart is also a 4 hour candle. So we'll have to go with the 4 hour candle because it's a higher point of interest. It is on the higher time frame and it will be possible, or it has the highest probability to hold. So I waited for the candle to close, and with this candle closes around 8 a.m. This candle closes around 8 a.m. So as soon as the candle closed, I switched to my 30-minute chart and then saw that price also swept the DRF level, which is the 4 hour low, which swept Asian low. So I was on the 15-minute chart too. I was checking the 15-minute chart. I saw that there's something called the divergence here, lower low, and then on the relative strength index indicator or chart, there's something like a higher low here, which shows you like that buyers are likely to come in and adds more confidence to your trade. So when I saw that all this happened, and it happened inside London kill zone, so as you all know, price works with time and time works with price. To get a high probability setup, you must align it with time so that you will not be over trading most of the times. So you could see, first we had a bullish doji, and then we had another bullish candle which confirms this candle as a morning star candlestick. So as soon as the candle closed above here around 9:30, it closed above here around 9:45, because 23 minutes after London session, it's also part of my high probability time. 23 minutes after or before any session, it's part of my high probability times which I get set up. So you see, I entered as soon as the money star candle closed, and then my stop loss was at this support or resistance level. Let me explain what the support or resistance level is. Support or resistance level is like a low. Let's say, for example, this is a low or high, and then price actually already swept it. It's likely for price, when price has gone up, expanded, it's likely for price to retrace back. You either use it as support to buy, or it uses it as resistance to sell. So whenever I get an entry and there's a support or resistance level below or above my point of interest, I use it as my initial stop loss, then add either 1 to 2 pips to it. You will see this confirmation of the morning star candlestick, this candle that closed, and my stop loss was here, and I added like 1 pip to it like this, and I targeted for something like 3.08 RR. That's what I target. So you could see price gave us something like 4.49 RR. As you all know, just stick to your risk to reward model. Don't go higher than what you have in your trading plan. So this is the trade which I took in London session. I actually even take another trade in New York. I took another trade in New York. So as you all know, I divide my risks into two sessions or 3, depending on how busy am I for that day. So I divided my risks into 2. I took another trade in New York session. So you can all see, let me explain the New York session trade. Both trades were very, very simple and straightforward. But in New York session trade, you could see price first fill this bearish 4-hour fair value gap, and then this bearish 4-hour bearish volume imbalance. As you all know, volume imbalances, highs and lows, fair value gaps are all liquidity areas which push or fuels the market. So a volume imbalance is something like this. Let me explain it. Let's say, let me do a graphical representation of it. It's something like this, whereby price leaves a gap. So you see, from here to here there is a gap in between, which actually leaves this place, the shaded area, as a volume imbalance for price to either retrace here and sell. That is for bearish volume imbalance, or retrace here and buy. It depends on either whether it's a bullish volume imbalance or bearish volume imbalance. So I saw that during pre-New York session, price actually filled. You see, price actually filled the fair value gap and also filled the volume imbalance and swept Asian high. So as I saw that, let me go back, sorry, so I can erase all this. As I saw that, I actually switched to my 30-minute time frame. Since you know, as I normally see, when I have either a volume imbalance or a fair value gap, I use the 5 minutes for entry confirmation. But since this happened outside high probability time, I will just use something higher, so like the higher time frame, like 30 minutes or 1 hour candle closures below the point of interest, since there's also a resistance above, which is the Asian high here, this place, the Asian high. So I actually saw that during pre-London, price already, let me erase this, price already swept the Asian high, and then you could see this bullish candle closing, a bullish candle closing below the Asian high, and then around 10:30 this bearish candle opened and closed around 11 o'clock. So 11 o'clock is when New York session starts for me. I know each and every trader has his own times whereby his or her trading sessions starts. But for me, my own New York session starts 11 a.m. Nigerian time. So I entered as soon as this bearish candle closes by 11 and my stop loss was above this high. Then I added 1 pip to it. That it was 170 pips. I added 1 pip, making it 171, approximately 172. So I targeted for, as you all know, 3.08. So it's what's aligned with my trading plan. Approximately 3.08, and even price gave us more than what we targeted. See, price sold for something like 9.68R. See, both of the trades were very easy and straightforward. They were not complicated. If you could identify this on your chart, you will make a lot of money. And also, when you use it proper risk management, you will make at least a huge chunk of money. So this is where I'll end the video. You guys have a lovely day ahead. Goodbye.